Morning, everybody. Today, October 9th, before the market open here, I am with my friend Imran. How are you doing today?
Good, man. Good to see you.
Good to see you too. So we're doing our Monday morning meeting. I think this is our third one. Unfortunately, there's a lot of geopolitical issues that have boiled up over the weekend that's causing some additional consternation in markets. So just make a note that we're, I think, both rather upset about that, and hopefully cooler heads prevail with all that. But what we're going to do here is turn and focus to some single stock ideas as we've been doing over the last few weeks. So Imran, you got a couple interesting plays here set up for us. Why don't you walk us through the first one, and we'll pull some analytics around it.
So, I mean, first one that's popped up on the radar is McDonald's. I mean, you can see that chart on the stock, and it's absolutely fallen off a cliff.
Yeah.
Right.
Getting killed.
So there's been some stuff around sort of minimum wage, and these guys having to hike minimum wage, and that's going to be, cost issues for them. And I don't think they're necessarily going to be able to pass that through as easily. But I'm not really identifying these ideas based on fundamental drivers. I'm just kind of looking at the technicals, and it's very oversold right now. So, we've put it in our YOLO trade bucket. They've got earnings due at the end of the month.
Right. And you can see that in the term structure here. So there's the 11/3. So the end of October is when the earnings are. So you can see that. Here's the implied balls, or rather, that date, obviously.
Yeah, so I wouldn't actually trade the option on that date or after that date, because that means you kind of need to have a view on earnings, which I don't have. But I just think, given the size of the drop that we've seen, it's likely we are going to get some sort of bounce from the oversold conditions, and then if we want to keep breaking down, it's probably going to happen after earnings as opposed to before. We're already kind of starting to head down towards that 235 area, which is a massive area of support where it was a long time ago. So if you look back at, sort of where that 230, 235 area is.
Yep.
Yeah. So there's some support down there, which is still a ways away.
Yep.
So I think kind of selling 27th of October 235 puts to take in some premium, I think that's got some merit, because I don't think if you're going to break below those levels, I'd say the probability of doing it before the earnings is relatively low. So that's kind of the idea there. Right.
I think that's a great idea, and I'd agree with you. As long as the overall market just doesn't kind of blow up on us, I think that's a really nice area to lean on, do that support zone that you mentioned before. And if we look at kind of where the big gamma strikes are positioned, the other thing that is interesting about that area is this is put positions here on the bottom in blue and calls on the top in orange. And what you can see is that as we get under 235, particularly under 230, the put positioning just kind of goes away. So what that tells me is there's not a lot of people currently positioned to profit or express the view that they expect a whole lot more downside than this in McDonald's. And so I do sort of agree with you that maybe this has just been on the short term overstretched a little bit to the downside, and leaning on that earnings date, that we don't break that level before the earnings date makes a lot of sense to me. So I think this is a nice one that you picked out here,
Cool.
Imran. And again, you can see the trade idea expressed here. Key to note too, this is before earnings, so make sure that you consider that earnings view in your trade.
Yep. And then the swing trade we've got here is Broadcom. So, like, for those who subscribe to my product, I produce these sort of screens every day. So, like, middle of last week, where Broadcom was kind of at the lows of the range, we were seeing selling puts as an opportunity. But now we've had a bounce back through the middle of the range, kind of reaching that volume shelf there. We're thinking selling calls against the fact that if you've already sold puts, it looks quite good. So you don't necessarily need to buy the puts have kind of halved in value, so you could just buy them back. But if you want to keep them on, we quite like selling like 920 calls out to November, which is kind of the highs that the stock made, because we think that would be quite a nice balanced position. The vol's quite elevated still, which is why we're above the horizontal line on the strategy compass, which says that vol's still in the kind of 70 percentile type area. And that's why we're getting into the kind of sell options zone there, both on the put side and the call side.
Yeah, that's a nice idea too, I think. And obviously the market has a little bit of a damper on it this morning. We had an incredible rally, I think, on Friday where tech really got a big lift, and that may have lifted up some of these vols a little bit. That's probably why this name in particular is popping up on your scanner. And so I think that makes a lot of sense. And this 920, obviously, as you mentioned before, that gives you a lot of room to run, right? That would put you back near all-time highs on the stock.
Exactly.
So that's quite an interesting one. If we look at Avgo, I believe it's the 900 area that has the most open interest, as we can see here. Right here is where we kind of see that call wall. And in a similar way to McDonald's kind of running out of puts below that 830, 835 area, 230, 235 area you mentioned before. The call positions here really dry up, particularly right at that 920 area that you mentioned. As you can see, the size of the orange bars above really 900, they really start to dwindle and decrease, which tells us that, again, there's a little bit there's lower positioning up there, which is less fuel for the stock to rally if we get up into the 900 area. So, Imran, I'm with you on this one. I think this one looks great. One question on this one. This morning we're seeing, futures are looking a little bit lower. Is there a level at which you would back off of wanting to sell that call today? So, as the market is opening and settling in.
To be honest, I've kind of made my macro view kind of clear, right? That I thought the market was trying to put in a bit of a bottom anyway. Mm-hmm. So I would actually not be in a rush to sell these calls.
Okay.
I was more urgent about selling the puts last week because I thought that made sense because I thought the market was going to bottom. So you might want to let it breathe a little bit, right? You don't just chase it down here. With these sort of geopolitical moves, often they are a bit of a fade as well. So I wouldn't be surprised to see by the end of the week, the market has traded a bit higher again, and then you might get a better entry point into those. So bear in mind that these strategy compass ideas that come up on our radar for singles, it's not always a case of, you need to execute these right this minute because it's so optimal. It's more like kind of showing you what is getting stretched. And it can get more stretched, right?
Yes,
you've got to use your own discretion around how you want to enter and exit stuff. But we're just showing you that this is starting to come on the radar. Last week it was a sell puts, and now Avgo's moved over to a sell calls. Personally, I think there's a good chance these tech stocks are going to lead a bit of a charge into Thanksgiving. So you might want to wait a bit more for the short call side of things. But that's my own discretionary view, right? If you want to be a bit more systematic about it, then you'll probably be comfortable selling, right?
Yeah, those are great kind of disclaimers in there, and a great way to view those. The one name that came up for us interesting this morning on the single stock side, we have Riot on our scanners that we built, and specifically what the scanner is, and you can see it here, is we call it our squeeze scanner. And what this incorporates is not only it changes in implied volatility, specifically a pickup and call skew, but also we look at gamma positioning above, how's that changing? And then we've also added in short interest data. So is short interest positioned to possibly help like a cover trade really squeeze this thing higher? And if you look at the chart here, you can see obviously we're off of recent highs. This name very heavily linked to the crypto space. But if the market was to stage kind of a more broad-based rally, you would think crypto would catch wind as well, or catch a tailwind as well. And so this is a name where if you needed some upside, you need some positive deltas in your portfolio, these are names that we think can have asymmetric upside. I certainly have no view on the fundamentals of crypto or Riot itself. It's simply a positioning exercise. And so you can see here right around this 10 area.
You know what that makes me think of as well? So I do track the crypto stocks a bit more regularly. So I write a crypto weekly piece for my subs, and I look at crypto stocks, and Riot is one of them, Mara, MicroStrategy, etc. And that's interesting that this comes up on your scanner, because if Mara's not coming up on the scanner and this is, then there might be an RV opportunity where you buy calls on Riot and you sell calls on Mara, because they're both on like a 90 vol or whatever. They're both super rich, right? So that might be the trade actually that is even better, because then you don't care what crypto does, you don't care what the market does, but your scanner is giving us some sort of intel that a squeeze in Riot can become self-perpetuating, whereas Mara doesn't have the same conditions. So what does Mara show it up with anything like that?
We don't have Mara on it is in the universe of stocks, but literally the only stock that came up on the squeeze analysis scanner today was Riot. And some of that could be, again, some of the gamma positioning above. To your point before on the implied vols of Riot, we can see 1 month implied vols around a 94. If we look at Mara here, just pull up kind of the comps, so to speak. It is actually even a little bit higher here. 103 is the 1 month implied vol on Mara. So if we look at, they have very similar structures here. We were talking before about the amount of call gamma in Avgo, right? And Mara in this case is trading at $8. And so I think what the major difference here is that's down around here. And so you have to go quite a ways to kind of, I think, lift some of this call gamma, particularly over 12. So I think what the difference is, there's a little bit more interest, open interest at closer strikes for Riot would be really the difference.
Okay.
And so, you bring up a very interesting idea, one that I didn't consider. So, kudos to you on this. But this structure, you can see where the call gamma kind of picks up into 12, 13, 14, 15 area. That's a little bit more kind of at the money, I think, in Riot, which is maybe what the scanners are picking up, as well as the short interest data. Just has a little bit of a different look to it. So that's our interesting stock here. Imran, great idea on possibly using some of the relative value between Mara, a very similar asset, and Riot. So kudos to you. Before we drop off here, you got anything you want to offer on the S&P 500? We try to cover the single stock side a little bit more in these morning notes, but anything you want to touch on here that you're watching over the next couple of days on the single stock side?
Provided this Hamas Israel thing doesn't turn into just a shit show and just takes
even more of a shit show.
If it doesn't, then I still thought the seasonals are looking good. We started to see signs that the market wanted to rally on Friday, the way it reacted to the jobs number, even though it was hot. The rates market kind of looked like it reached a bit of a peak with skew extremely high, vol extremely high in rates in it, and it's starting to mean revert. So we're starting to see signs that this kind of risk rally that we're looking for into year end, or at least into Thanksgiving, may be on. I kind of want to see follow through this week in terms of price. I also want to see fixed strike vol come down, because it did end last week slightly higher still. So I'd feel more comfortable if fixed strike vol got offered. That would just indicate to me that the dealers are not wanting for gamma.
Mm-hmm.
They've got enough gamma on their books. They're happy to offload some. Maybe some clients are taking profit on more puts to put pressure the vol down. The skew has got room to come down as well. So that Vanna effect if we start to see vol come down, you can start to see the Vanna rebuy that we often see that can fuel the next leg higher, back towards 4,400. That's kind of what I want to see. So, we'll be watching for that type of stuff.
Yeah, and I'm largely on the same page here. The market literally just opened, and as you can see, we're weaker, giving back some of the gains on Friday, digesting the kind of geopolitical situation. I think oil is the big one that maybe could put a wrench in things here. Yields are coming off a little bit. Certainly, if oil goes higher, I think that starts to cloud I'm looking at the wrong symbol here, but that starts to cloud the inflation narrative a little bit, which so often, unfortunately, here on Wall Street, we're just looking at price impact of tragedies and things like that, and oil here is something to watch. On your point of the impact of Vanna and implied volatility, this here just shows, and I think we'll kind of end with this, to your point about that fuel to lift the market higher. In other words, Vanna. Here we're looking at the difference between 1 month realized volatility and the VIX. And if this blue line is higher, that tells us that there's a little bit more of an implied volatility premium, so to speak, related to the VIX and 1 month implied, 1 month realized volatility, again, the S&P. So there's a little bit of extra premium here. And I think when this premium is higher, that is the Vanna fuel. This is kind of a visual depiction in a way of some of that fuel that's available to help the market rally. And so I think on Friday, everyone's kind of like, if you're not in the options landscape, you're probably a little bit surprised by the strength and how kind of sharp that rally was on Friday, right? Well, when you have all this extra elevated implied volatility and that kind of volatility premium in the market, that can really add fuel to the fire when the market starts to rally. So I too am targeting that 4,400 area. We really got to close, in my view, up over 43.20. That's my line in the sand. If we get over that, then I think that's where the Vanna effect really kicks in and can maintain. That's right in where we rejected on Friday. So that's what we're watching. You got FOMC minutes on Wednesday, PPI I think on Wednesday. You got CPI on Thursday, which is another big one everyone's watching, and then we have something like 12 Fed speeches this week as well. So
and you've got JP Morgan and Citi, I believe.
Excellent point there. I think people are always particularly with interest rates such an issue. I think those financial earnings, as you can see here on the 13th, those financial earnings are probably more highlighted in this environment, right?
Yeah.
All right, everyone. So we're going to keep it there, short and sweet as we do on Mondays. Let everyone know how they can get a hold of you, and great analysis today. Thank you very much.
Oh no, always good to catch up, dude. Helps me at the start of the week as well. So options_insight is my Twitter handle, and options-insight.com is our website. Those are the two places to come. Check out what we do. Thanks.
Sweet. Thanks. And you can catch me at SpotGamma, spotgamma.com. And we have this little QR code in the top left. That's for the hedge, which is a course that we jointly put together. Imran is the instructor for that class. Takes you all the way through what is an option into advanced portfolio management through an options lens. So please go check that out. And we'll see you next week, Imran.
Take care.